My name is Ellie Wade, and I'm with First United Bank.
What financial documents do I need to have when I talk to somebody?
We need to know where you've worked for the last 2 years. We need to know what your income is, so we want to see paycheck stubs. And we're going to ask for W-2s if you're W-2'd, you're a W-2'd income and not self-employed, to see what your incomes have been in the past years. And if you're self-employed, we're going to ask for tax returns and kind of do a average of the last 2 years. Get all that information. We're going to pull your credit. We need to see how you've paid your bills and if you've paid on time, if you've had any collections. Very important.
In this whole process, I've heard the word pre-approval. I don't even know what that means. Can you help?
Pre-qualification is I'm going to take all of the information. I'm going to run it through the system. I'm going to want you to go out and put a contract on a house, and then we find out later on that you don't qualify for it. So once I have that and I've pulled credit and everything matches the debt to income ratios, your income, all of that is in a good position, then you're pre-qualified.
Why is a credit score of a certain number important?
Well, the main thing they're looking for is, have you paid rent in the past? Is this payment going to be comfortable for you? Is it something that you can make comfortably? We don't want to put anybody into a home that they could lose because they can't make a house payment. That wouldn't be fair to anybody. So they're looking at, do they know how to save? Do they have the income to make the payment? And are they used to making payments on things? That's why we pull credit. We want to see if you're used to that. And if you are used to paying payments on credit cards or car loans, then more than likely you're going to know how to make a house payment as well.
There are all these terms that I come in contact with. Like, mainly, what really is kind of difficult to get my head around is down payment and closing costs.
Most loans, conventional FHA, are going to require down payment. On an FHA, it's 3.5% down. The down payment is what you're putting down on the house, because underwriters look at it this way. If you've got some skin in the game and you've put your money down, then more than likely we're not going to get the house back. You're going to keep making those payments. I love down payment assistance because it helps somebody who doesn't have quite enough money to put down, but they've got a family and they want to get into a house with a yard. It helps them maybe not have to have quite so much saved to be able to get into a home, and they can take the money they have and maybe furnish the home. Sometimes you've got to buy a refrigerator, furniture, so it helps them get into the home up front. Why not put money down on a house and start building equity and build your own asset, wealth, and when it's your home, you get to do whatever you want to. You can paint the walls any color you want to. You can furnish it any way you want to. And that's half the fun of it.